So starting on the weekly, the week of July 28th, Monday, the market traded down this entire week. It reacted off of this level. The market reacted off this level, the 45.97 level, and it began to trade down. This is that weekly candle, and it began to trade down. So as we can see, we've traded into a fair value gap, those that trade ICT concepts. So we've traded into this fair value gap on a weekly, but we've also traded into this fair value gap on a Monday. So for that reason, I'm expecting possibly a buy model next week. I will say that with the market creating this trend in that weekly candle, that it's very possible that we may continue down to take out this liquidity. But with trading into these higher time frame fair value gaps, the fair value gaps from Monday, June 2nd created a fair value gap. So from these fair value gaps and the one that's created on the weekly, Monday, June 23rd, I will expect some buys, but due to the markets trading down, if we go down to the 4-hour, with the market possibly creating a new trend on the 4-hour. Okay. So with this trend, as we can see during that week, the market has created a down move. Now, if I'm looking to take a sell, I would be expecting some sort of retracement. And we're just going to put our Fibonacci where the first candle began the down move. And I would be looking to take a sell somewhere between here, where that blue line is delineated on the Fibonacci retracement. I'll be looking for at least somewhere near that 62% retracement, or we may go as far as taking out this liquidity and then creating some sort of down move. But initially, for the week, I'm looking for it to be in some sort of buy model short-term temporarily, if this is not the beginning of a new trend. But I'm solely expecting to take some sort of sell when the market retraces. If we go down to the 1-hour, we can see the movement that's created, just solid selling. But next week, this coming up week, the week of August 4th, we can expect some buying and then possibly a sell-off. So that's what I'm expecting for this week. Coming up, we'll see how the market opens. I'm sort of expecting it to gap down. And if it does gap down, I'll expect some sort of trading into that gap, and then possibly continue to the sell side. So if we get some sort of gap down here, I would expect the market to trade back up. Let's see. I would expect the market, if it gap down here, somewhere here. Let's bring this down. Let's say if the market was to gap somewhere in here, maybe even closer in here, I would expect a gap down for it to trade back into that gap. Let's see. Trade back into that gap. Gap down, trade into the gap. And then we would continue to the sell side, possibly. But ultimately, what I'm expecting is some sort of manipulation here. And then we're going to go here. And we're going to just continue up. We're going to go here. And then just continue up until we take liquidity around here. Let's go back to the fib. Let's see. Fibonacci retracement somewhere in there. Let's see. Here. Somewhere in here. Right, and then we'll get some sort of retracement from here or from that level between the 70 and 79 level. That's what I'm expecting. So we shall see what the market gives us for this upcoming week.